Okay. So guys, in the previous class, we spoke about distributions and also the NAV calculations impact because of the cap stock activities like subscriptions, redemptions, and if there is any error, how it will impact. These all these concepts we discussed in the previous class, right? So today we'll talk about few more topics: realized capital gain and unrealized capital gain. Similarly, realized capital loss or unrealized capital loss. Yesterday also we spoke about these concepts, right? What is the realized capital gain, unrealized capital gain? Can anyone tell me what is the capital gain and what is realized capital gain? Hello?
Realized means when we are taking the profit by solding, that is realized profit.
Mhm.
Unrealized means we are holding that for future selling. That was not sold. That is unrealized.
So based on the current market value, if you can estimate the value of gain that we can realize if you can sell it at the time, that is called unrealized capital gain. Not at realized, but based on the current market value, we can revalue the asset. That is called unrealized capital gain. So how we need to account this capital gain and unrealized capital gain and realized capital gains in the account, we will see now. Okay. Suppose if it is a gain, where do you know where do you need to show it in the financial statements? If it is a gain, let's say for example, here we have a 1,000 rupees. We have invested today 1,000 rupees, and we sold it for 1,200 rupees. 200 rupees is a gain, right? So where will you show this 200 rupees?
Dividend.
Income as credited. Credit income.
I mean, which financial statement we have to show it? Is it in the profit and loss account, cash flow statement, notes to account, or a balance sheet? Where we have to show? Hmm? Any idea, commerce students? Hello? Any idea,
Sir,
guys?
income.
In the income statement, we have to show this 2,000 rupees. What about this assets selling? I mean, selling for 1,000 rupees. The asset value will be reduced in the balance sheet for the same extent, 1,000 rupees. And we are receiving a
Yes.
cash 1,200 rupees, right? So 1,200 rupees cash balance will increase. This is how the accounting will work in the balance sheets. I mean, the financial statement. Okay. Let's consider one example here in this fund. Suppose we have an ABC fund. We have an ABC fund. In this example, we will see how to account this unrealized capital gain and realized capital gains. If it is a loss, how to calculate it now, we will see here. Okay. The first one is suppose day one in the morning time, we have a TCS shares. Let's assume we have 100 shares we are buying. We are buying 100 shares. So we are buying 100 shares. Let's assume per share value is 50 rupees. Per share value is 50 rupees. So what is the value of shares? 100 into
100 into 50.
50. So 5,000 is the
5,000.
value of shares. While purchasing the shares, fund ABC fund has purchased 500 shares. అది ఎందుకు వచ్చింది సరే so we have 50 shares, each is 100 shares, and each share price is 50 rupees. Total value of shares is 5,000 rupees. We have to account for this entry, right, with this transaction, right? While you are purchasing TCS shares, we have to write an entry. Can anyone tell me the general entry for purchasing this shares? Hello? What is the general entry for purchasing of the shares? I think already we discussed, right, all these general entries.
Yes.
Cash account debit to shares account.
Cash account debit to shares account for buying shares.
Shares account.
Shares account debit
Shares
to
account debit
cash account.
to
Shares
cash.
to cash. Shares to cash.
TCS shares account data to
Cash account.
how much? 5,000 rupees, right?
5,000.
5,000.
5,000.
To cash account. So 5,000 rupees. This is the general entry for purchasing of shares. And let's assume on day one closing. share value went up to 52 rupees. 52 rupees. In this case, what would be the value of shares?
52,000.
100 into 52 is equals to 52.
So we have
5,200.
5,200. So is it a gain or loss in this case?
Gain.
At day one
Gain.
closing, we have a gain of 200 rupees.
200
200
rupees.
rupees.
For this 200 rupees also we have to post an entry, right? Because our asset value has increased up to 5,200. Isn't it or not?
Yes,
or
yes.
no?
Yes,
Yes.
sir. Yes, sir.
Now tell me, as an ABC fund holding these investments, suppose if you observe this balance sheet, let's go back to the previous balance sheet where we were discussing. Here, we have this balance sheet, right? Average cost of investment and all. Let's assume the same example. I'll take this example. Give me a minute, guys. Sorry, guys. So let's assume as an asset side, we have 50,000, 5,000, sorry, 5,000. Okay. And it went up to 5,200 in the day one closing. So if it is going up to 5,200, will our NAV will it impact? Are we going to have an impact on our NAV because of this increasing of share value?
No.
Are we going to have an impact or not? Because asset value is increasing, right? We had 5,000 now earlier, but it's now increased to 5,200. No change in cash balance because it's not yet sold out. No change in receivables. Management will be nothing. Let's assume all these are zero and liability is also zero. In this case, 5,200 net asset value. Total net asset value is 5,200, right? Maybe if it is increasing up to 54 rupees. In this case, it will went up to 5,400 rupees. So are we going to have any impact on our NAV because of the changes in the asset prices? First tell me, is it a capital realized capital gain or unrealized capital gain?
Realized
Day one
capital.
closing, we had a share price 52 rupees, not yet sold.
Realized capital gain.
Realize capital gains.
Not yet sold. We didn't sold it.
This is unrealized.
Unrealized capital gain. Still, are we going to show it as 5,000 rupees or 5,200 rupees in our balance sheet?
5,000 rupees.
5,000 rupees.
So only 5,000 rupees we have to show it in the balance sheet.
Yes.
No. We are going to show it as a 5,200 rupees. There is a value change, right? From 50 to 50 rupees.
Yes, sir.
Whatever the holdings on a daily basis, we have to calculate NAV, net asset value. What is net asset value? We have to take the present value of asset values. What is the value of asset? 5,200 by end of the day. So we have to take 5,200 only. Asset value has increased, right?
Yes, sir.
So let's understand, guys. That yesterday we were talking about the difference between realized capital gain and unrealized capital gain, right? So if it is a realized capital gain, we will show it in the profit and loss because it's a realized. Unrealized gain, we cannot show it in the balance sheet profit and loss account. We cannot show it in the profit and loss account, but we can show it in the balance sheet as a comprehensive income. We call it as other comprehensive income. In short form, other comprehensive income. We call it OCI. In the other comprehensive income, we will show this 200 rupees. This other comprehensive income is also part of reserves. Reserves. You know what is reserves, right? Under the reserves category, we have security premium, provisions, reserves. All this will be part of reserves only. So are we going to consider these reserves for calculating NAV? Are we going to calculate it?
Yes.
Reserves. Is it a part of liability to calculate NAV? Yes or no?
No, sir.
Why?
It's liability, but current.
Current liability. Yeah. In balance sheet, we have three items: equity, liability, and total assets.
Equity, sir.
On which part it will come reserves?
Equity.
So equity, is it part of liability? Do you need to consider the equity part to calculate NAV?
No.
Come on, guys, say confidently. Already we discussed a lot about it.
No, sir.
Oh, no, sir.
That's the reason we are not going to consider this other comprehensive income. It's a part of reserves. There should be dual impact. We have to account twice. Here in the balance sheet, profit and loss account somewhere, we have to account twice. So here we accounted 5,200 rupees. From 5,000 to 200 rupees increase. So here we accounted 5,200. One time is done. We should be done the same thing in other financials or maybe the other item also, right? The asset side we have increased. Liability side also we should increase 200 rupees. Where we should increase? We should increase in the part of other comprehensive income. Okay. So if you want to write a journal entry for this unrealized capital gain, how to write the journal entry? Can anyone tell me? If asset is increasing from 5,000 to 5,200 rupees, are we going to debit this asset value or are we debit credit that asset value? Yesterday only we discussed right here. Asset value increased or reduced? If asset is increasing, are we debited or credited? In the redemptions, cash value is reduced. So did we credited or debited?
Credited.
Why asset value is reducing? In the subscriptions, here the cash balance is increased. Did we debited or credited?
Debited.
So now tell me, if asset value is increasing, do we need to debit that value or credit that value?
Credit.
Credit.
Credit. In the previous example, again I'm saying, in the subscription part, cash value is increasing or reducing? Hello?
Sir?
In the subscription of capital, in the previous example, yesterday we spoke about this example, right?
Yes, sir.
We had a subscription of 10,16,000. So with this subscription of 10,16,000, our asset value, cash value has increased or reduced?
Increased,
Increased, sir.
Where we accounted, debited or credited?
debited,
Debited, sir.
In this case also, because of increasing of asset, 200 rupees extra, are we going to debit this 200 rupees or are we going to credit this 200 rupees?
debit,
Sir.
Debited, sir.
Debited only, right? So now tell me which
Yes.
account we have to debit here. What is the name of
Cash.
asset? What is the
Cash
name
account.
of asset that is increasing?
reserves, reserves,
Reserves is an asset.
No, sir.
Here we purchased one asset. What is that asset?
shares,
TCSA.
This is a share. This is our asset, right?
yes,
Now which asset value is increasing?
TCS shares,
TCS shares only, right? So which account we have to debit?
TCS.
TCS shares only. So TCS shares.
Shares.
Account debit. How much?
5,200.
Already we debited TCS shares of 5,000 rupees.
only
Again,
200.
if you debited 2,000,
Yes, sir.
5,200 rupees, it will become 10,200 rupees. Do you have that kind of
Yes,
value here?
sir. Yes, sir.
No, sir.
Only 200.
200.
Only 200.
Only
sir.
200 rupees, guys. Understand the
sir.
account logic. Already we debited here 5,000 rupees, right? That means asset value is indicating 5,000 rupees of value. Again, if you do the debit 5,200 rupees, the total TCS value will become 10,200. Really, do you have that much value here? Totally, we have 5,200 only.
Yes,
What
sir.
is the excess value is increased?
200.
200 rupees. Only for the 200 rupees we are accounting here. That is called unrealized capital gain. We are accounting. That is
Okay,
debit.
sir.
And
Okay.
unrealized gain. Unrealized capital gain. Why we need to credit this unrealized capital gain? Why? Because it's a gain. Okay. Unrealized capital gain account credit 200 rupees. Understood, everyone?
Yes, sir.
This is called unrealized capital gain 200 rupees. Now, let's assume on day 2, share value is increased up to 54 rupees. Now tell me what will be the value? 5,400 rupees, right?
Yes, sir.
So how much you gain again we have received?
400, sir.
200.
200, sir.
200
400 or
Yes,
200?
sir.
200.
200, sir.
200.
200 only. Because overall unrealized capital gain is 5,400 rupees. But already 200
Yes.
accounted, right?
Yes.
So
Yes, sir.
balance 200 only we will be accounting. So now tell me the general entry for this.
TCS shares accounted,
Hmm.
debited 200.
Okay, credit.
Unrealized
Capital gains account.
capital gain is accounted
200.
200.
200 rupees, right? Okay. That's it. Then on day 3. On day 3. Suppose we are selling this. We are selling this asset at 53 rupees. We are selling it. Closing means we are selling it. I mean, we are selling it on the day 3. So what is the general entry?
Sir,
What is the general entry on day 3?
Cash
that
account
is,
debit
Cash
to
account
shares.
to cash account to
cash
TCS
account
shares. TCS
Shares.
shares.
Hmm?
Cash
Cash
account
account
to
debit to
TCS.
shares account.
Let's assume we are not selling it. Again, it dropped down to 53 rupees on. Drop down to 53 rupees. Now tell me the general entry. What would be the asset value in this case?
5,300.
5,300.
So 100 into 53, 5,300. So
Last-
what is the gain? Is it a gain or loss?
Last
Loss,
Loss.
sir. 100
How
rupees
much?
loss.
last
100.
100.
rupees.
So what is the entry for this loss?
unrealized
Unrealized gain capital account data to TCS shares account.
TCS account. 100 rupees.
Unrealized.
Capital
100.
Capital loss.
capital loss account 100 rupees and TCS shares 100 rupees.
Are you guys sure?
TCS shares accounted credited 100.
You have to write as unrealized capital loss
Yes, sir.
account debit. How much?
100 rupees.
100 rupees.
Yes,
Then
then
which account we have to
TCS.
debit? Credit?
To TCS.
TCS shares. Why TCS shares we are creating?
Because already debited for
We have to
200.
reduce the value of TCS shares
Yes.
up to 100 rupees. That's why we credited TCS shares for 100 rupees. Now again TCS shares value came down to 5,300. This is how we have to write general entries for the realized capital gain and unrealized capital gain. Understood, everyone? Whenever there is unrealized capital gains or unrealized capital losses, there will be impact in the NAVF fund, net asset value fund. Okay? Because asset value is increasing, right? The same asset value will be considered for the total NAV calculations. Under the asset category, if you consider the average cost of investment, the cost of investment, we have to take these values only, the updated values, current market prices. So whenever we take the current market prices and mutual funds, definitely there will be daily fluctuations in the security market prices. So definitely there will be asset value changes. Whenever there is changes in asset values, the total net asset value will impact. Understood?
Yes, sir.
Let's assume realized capital gain. How to post the realized capital gain or loss entries. Okay. Now we are selling the shares for 60 rupees. We are selling the shares for 60 rupees. At what price we purchase? 50 rupees. And there was all these gains. Now we are selling it for 60 rupees. So totally we are selling it for 6,000 rupees. 100 into 60. 100 shares into 60 rupees. So what is the gain here?
1,000. Maybe 700.
1000 rupees.
Hmm?
Total 1000 rupees.
At what price you purchased?
50 rupees.
50 rupees,
50
right?
rupees, sir. Yes, sir.
So we realized
Ikkada
that
60 rupees.
6,000 rupees. Difference of 1,000 rupees is all realized capital gain. Don't confuse with unrealized capital gain already accounted, right? Yes, unrealized capital
Okay.
gain you accounted for the respective days. But here we
Okay,
have a
sir.
total realized capital gain 1,000 rupees. So we have to account it for the 1,000 rupees only. We're realizing it, right? 1,000 rupees gain. So we have to account it for the 1,000 rupees. Now tell me the general entry for this realized capital gain. Are we going to receive 5,000 rupees cash or 6,000 rupees cash because of the selling of 6,000?
6,000 rupees cash. Cash account,
So let's account cash account debit. Sorry.
cash account debit 6,000.
How much? 6,000.
6,000.
Okay. Then
And TCS 5,000 and release
to
capital gain
TCS
1,000.
shares. Why we are creating the TCS shares?
Because we sold the TCS shares.
We are selling it out, so it's going out. As
Yes.
per real account, we have to credit. How much?
5,000 rupees.
5,000 rupees only. As per the cost only we have to account. Okay. Then what is the gain?
Capital gain the 1,000 rupees.
1,000 rupees. Why we have to credit this capital gain 1,000 rupees?
You have get the gains from the capital.
Because it's a gain. As per nominal account, all credit incomes and gains. So realize capital gain on sale or something, or we can say gain on realized capital gain. How much?
1,000 rupees.
1,000 rupees. This is how we have to write a general entries. Everyone understood?
Yes, sir.
See, again, I'll tell you the treatment. Here we have all these unrealized capital gains. So unrealized capital gains will go to the other comprehensive income. And we have a realized capital. So this realized capital gain will go to the profit and loss account. Okay, remember this point, very, very important. Definitely you may get a question like from the HRs or recruiters also. How you will treat, where you will show this realized capital gain, unrealized capital gain. Only realized capital gain, we have to show it in the profit and loss account. If it is an unrealized gain, then we have to disclose it in the balance sheet under the comprehensive income, other comprehensive income. There is a category called other comprehensive income. In this category, we have to show it there. Understood?
Yes, sir.
Everyone? Everyone understood, guys?
Yes, sir.
Yes, my.
Then we'll go for the expenses. We'll see the expense calculations and everything. Let me delete all this. Okay. Now we'll calculate the expenses. Let's take an example. We have a ABC fund. So what were the different types of expenses will be there for the fund? Can anyone tell me?
Registration charges.
Common expenses, guys. The major expenses.
Registration.
Registration. Actually, for the registration, we call it the miscellaneous expenses. We cannot show directly as registration expenses because registration expenses is something related to the incorporation of the fund or something. So until we incorporate the company, we cannot show it as registration expenses directly. We have to show it as a miscellaneous expenses. So forget about miscellaneous expenses and registration expenses. What would be the normal operating expenses as the fund will have?
Salary, fund admin fee, custodian fee.
Yes. So custodian fee. Why custodian fee? There will be custodians to handle the funds, right? So we have to pay the custodian fee. An admin fee, fund administration fee will be there. We might have appointed fund administrations, fund admin fee will be there. And
Auditor's fee.
yes, audit fee will be there. And then some legal fees will be there. Then investment manager fee will be there. Management fee is there. These are the different types of fees we have, right? There's an expense that I'm talking about on the expenses side. Forget about the income. We're talking from the expense perspective. Expense is also a NAV component. How it's going to be NAV component, we'll discuss it. Okay. So as a fund, normally they may have these kind of expenses. And how do you process these expenses, sir? What are the methods? What are the types of methods we have to process the expenses? Process methods. So we have a direct method. You have direct method. What is direct method? Suppose I have spent some expenditure, 500 rupees for salaries. Directly, if I write this entry like this, salary account, debit to cash account. This is called direct posting. Direct entry. Direct entry means without creating any accrual. What is accrual? What is accrual? Hello? 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 Are you there?
Sir? Sir?
What is accrual concept? No one is responding.
It is a financial accounting
That
method,
has to
sir.
be, spent sometime, after some time.
Yesterday also we discussed, right? An accrual concept.
Yes, sir, according to expenses.
Then what is the accrual?
Yes, sir, according to expenses and revenue.
When we will record it?
We will record the entry, but expenses will not be paid now.
So basically there won't be movement in the cash paying or receiving, but still if it is an expense or income, the moment if it is incurred or maybe the earned, we have to account it in the books of accounts. That is called accrual concept. We will account it as a payable receivable, right? That is called accrual. So without writing that accrual entry, directly if you are meeting some expenditure, directly you are paying out of the cash, paying from the cash account directly, or if there is any unexpected payments, you are paying directly. That is called direct payments. Okay. Then we have an accrued concept. What is accrual? Here we paid salary directly. So we are accounting it as a salary account to cash account. Suppose we are not paying now, maybe we'll pay it later. But still we have to account for this month or this year, right? So how do we account it? For the accrued salary, how we need to account it? For this month it should be expense, but I'm not paying it.
Salary account of accrual.
Salary account, debit to. Are we paying cash?
No, accrual. We'll put it
What
as
is the account name that we need to create for the accrual?
Payable.
Yes, payable.
payable.
What
Sir.
payable? There should be the account payable, right? Something account payable. What is that
Salary
account?
payable.
Salary payable. Salary payable account. This is called accrual. This is one type of method of processing. Then we have one more method called prepaid. What is prepaid?
First we have to pay it, then
First we will pay it, then we will account it in the books of accounts when it becomes a due.
yes.
I can pay the entire rent for whole year at once also, right? At the beginning itself, I can pay the whole year rent.
Yes.
Suppose there is an insurance, normally for the insurance and all, this kind of prepaid entries will come.
Yes.
How insurance will done? As we are paying some premium, there will be monthly premium and also yearly premium. Most of the people will choose yearly premium. Why? Because some fees reducing something. Even forget about insurance. Amazon premium, Amazon, Netflix. You know these concepts, right?
Yes. Yes.
Yes,
There is
sir.
a subscription fees. How we will pay the subscription fees? Yearly once or 6 months once we will pay, right?
Yes,
Maybe in the January month you are paying it for whole year. January 1st, 2024, you are paying it for the whole year. Let's say you are paying for 1200 rupees. But every month it would be only 100 rupees, right? If you divide
Yes, sir.
1200 into 12,
Yes.
every
Yes.
month fees will be 100 rupees.
Yes.
But you are paying it for Yearly once,
1200.
as 1200
Yes, sir.
rupees. Suppose if I account this 1200 rupees in the January month itself, if I don't account this 100 rupees in every month, what will happen? In the January month only, profit will be less. Why? Because I'm showing more expense, right? As
Yes.
1200 rupees, I'm showing it as an expense.
Yes.
But from the next time onwards, definitely there will be huge profits because I'm not accounting in any other months. So that's not a fair treatment. What is the fair treatment?
We have to
You are going to use this Netflix premium for 12 months. So let's divide this. Let's distribute this 1200 rupees for every month. So every month it will come 100 rupees, 100 rupees.
100 rupees.
For the respective months, we have to charge 100 rupees each.
Yes, sir.
Right?
Yes, sir.
Maybe we are paying it in advance, but the accounting entry should be done as an expense should be for every month. But what would be the entry for the prepaid? We are paying it, right? 1200 rupees we are paying. We have to account somewhere. So how do we account this? As we're paying some advance 1200 rupees, is it an asset or liability for you? You are paying advance.
asset.
You guys are sure with this, right? If you are paying in advance, it is an asset, right? So it's an asset only. So what is that asset name? Prepaid account debit. How much?
1200.
1200.
1200 rupees. To how we are paying this prepaid?
Cash.
In the form of cash only, right?
Or
So cash account will be credited. How much?
1200.
1200 rupees. This is the entry that we need to pay it on the January 1st. Then let's come back to the January 31st, 2024. Every month we have to post this entry, right? Expenditure, Netflix premium, Netflix premium, like that we have to pay, right? Every month we have to post this show this expense rupees 100 rupees, right?
Yes. Yes.
So January
Yes,
month
sir.
also we have to in January month also we have to show. How much we
Yes,
have to
sir.
show?
100 rupees.
100
100
rupees.
rupees. Now tell me how to show this 100 rupees.
Cash account 100
Cash
rupees.
account is
Cash account
We are not
1100.
paying cash. Cash is not coming. Already we paid for whole year 1200 rupees. First, what is this 100 rupees? It is an expense or not?
It's expense.
The expense.
So let's write
expenses.
an entry for the expense. What is the entry for normal expenses?
Expense account to cash account.
Expense account debit. How much? 100 rupees. To cash. We are not writing cash because already we paid.
Prepaid account.
There is an asset called prepaid, right? We created an asset called 1200
Prepaid.
rupees. So every month what will happen? This 1200 rupees will be keep on reducing, right? Over the
Yes.
usage. First year you use 1 month. So what would be the prepaid balance? It will be 1100.
1100.
After 2 months usage, that will be 1000 rupees. After 3 months, that will be 9900 rupees. Suppose if you want to reduce that asset like an every month basis, 100 rupees, 100 rupees, what we have to do?
We have to give the credit to the
We have
prepaid
to
account.
credit because
Already
already we
debited.
debited with 1200
Already
rupees.
debited.
If you want to reduce 100 rupees, 100 rupees, let's credit that account. Prepaid account. How much? 100 rupees. So what will be the entry on 28th February? 28th February. Same 100 rupees expense. What would be the entry?
Same expense account debit.
Same
to
entry will be
same
repeating.
entry.
So whenever we are writing this prepaid, we will see the balance of a prepaid. Okay, here. Let me write it here. Balance prepaid available in balance sheet. So after meeting first month, after paying this first month the prepaid, what would be the balance sheet value in the prepaid?
1100.
1100. After paying second month,
1000.
1000. After paying third month,
900.
10 rupees. Like that, every month after posting this entry, the prepaid balance will be keep on reducing.
Reducing.
So it will become a 0 on 12th month.
Yes, sir.
On 12th month and December month, it will become a 0. December 2024. It will become 0. That is called prepaid concept. So these are the methods. We have different methods we have to account this expenditure. depends on our requirement, we will follow these expenditures. Follow these methods. Okay. Now, we understood accounting entries also. Now, let's come back to the impact of NAV. We are calculating daily NAV for the mutual funds, right?
Yes, sir.
So here we accounted expense. Suppose let's assume we have a management fee. Then let's say audit fee. Audit fee. We have 1,000 rupees or let's say 1,200 rupees per year. Okay. When you will pay this 1,200 rupees, maybe let's assume we will pay it on the year end. We will pay it on the year end. We will pay it on the year end. Okay, second guys, just give me a minute. Okay, yes. Let's understand. Sorry. So we have to calculate NAV on daily basis, right?
Yes, sir.
So we have 1,200 rupees audit fees per year. So how we will account this expenditure? Suppose if can I charge this audit fees on a monthly basis to the fund, ABC fund? Every month once, I'll charge 100 rupees, 100 rupees. Is that fine?
Yes,
Are you sure? Is that fine?
yes, yearly 1,200 rupees, we can segregate that 100 rupees to every month.
But we will calculate NAV on a daily basis, right?
Yes,
So if we calculate the NAV on monthly basis, maybe on 31st March, like this, 31st December, 31st January, if you start accounting 100 rupees, 100 rupees, only on this day there will be huge impact. But we need a daily NAV, right? We are accounting for daily NAV. Every month we have to calculate NAV. Every day we have to calculate NAV. Don't you think that there won't be impact in the NAV because of these expenses? First tell me, are we going to have an impact or not? Because of these expenditures. Which one is asset, which one is liability? Try to understand in that way. Are we going to have an impact or not? Let's come back to one by one. First one, prepaid direct entry. Directly we are writing like this. Salary account debit to cash account. This entry, will it impact our NAV or not?
No, sir.
it's a direct expenses, so it's a have an impact.
Sorry, I didn't get your point. Come again.
It's a direct entry, direct impact is there. So now,
So we are writing salary account. Salary is a part of profit and loss account. It will go to profit and loss account.
yes,
Cash
yes,
is the asset, right? Balance sheet item.
yes,
If you are paying 500 rupees cash, so cash balance will reduce, right?
yes,
So it will impact our NAV.
yes, correct.
Are you guys understanding?
Yes, sir.
Yes, sir.
Let's come back to the accrual concept. Accrual concept. So here we are paying salary and also salary payable. This account, will it impact NAV?
No,
No.
Are you guys sure?
no,
Are you guys sure?
yes,
Salary account again is a expense, profit and loss account item. It will go to the profit and loss account. It won't impact. What is the salary payable? Where do we show it?
payable account, sorry.
So where do we present the salary payable?
Yes, salary payable account.
Yeah, where we have to show this? Is it a liability or asset, income, what it is? Huh?
Liable.
Liability, right?
Yes,
Yes, sir.
So in the balance sheet, if you're accounting under the liability, again we will have to reduce the liabilities from the assets, right? Are you guys understanding? In the NAV report, if you see this NAV report, Where is NAV report? Once again. Here, see this one, payables, accrued management fee, accrued expenses. We have these expenses, right? Suppose if you have any changes in these accrued expenses and all in the liability side, definitely there will be impact in the total NAV also.
Yes, sir.
So now tell me, are we going to have an impact or not because of these expenses, accrued expenses?
Yes,
Impact.
It will
impact.
impact us. And also I'll tell you one more follow-up entry for this one accrued. Here we are accruing the salary account to salary payable. Suppose you are paying this entire salary. You accounted for 100 rupees like that. All 12 months you accrued. And December 31st, you are paying this expense, 1200 rupees. How will you write this entry then? How will you write this entry?
In the end of December 1.
The end of the December. Every month you started accruing 100 rupees for salary payable, salary account to salary payable. So at the end of the year, we have to pay 1200 rupees. We are paying it. So what would be the entry?
Salary payable account to salary account.
If you are paying 1200 rupees, there is involvement of cash, right? We are paying through cash only.
Yeah.
So cash is going out. Cash is going out, right?
Yes, going out.
So which account we have to credit?
Salary payable account.
Again, we're saying salary payable.
Cash.
No,
Cash is
salary
going
account to
out.
cash
Real
account.
Cash.
account. So cash account should be credited. We are paying cash. How much? 1200 rupees. And which account we have to debit?
To salary account.
Salary.
If I debit the salary account, expense will become more. Already accounted expense. Every month 100 rupees I accounted. But I didn't pay it. For that reason only I accounted salary payable, salary liability created. Now I'm paying this entire liability, right? So I have to cancel this salary payable. So salary
I said
payable account credit, debit
cash account.
1200 rupees to cash account. This is the general. Now tell me, NAV impact in which case? In this case or this case? An accrual part or an settlement part? Where NAV impact?
Settle.
Both cases. In that also cash is involved. No?
Are you guys sure?
Because first case, direct case, salary account to cash account. Same like that, salary payable account to cash account.
Salary account to cash account. Here it's have a direct impact.
Yes.
An accrual. We understood an accrual also there will be NAV impact, right?
Yes.
Here also it will impact NAV because salary payable we are creating.
Yes.
Salary payable is a part of NAV component. So it will have an impact on the NAV on accrual date. What about this one?
This is
Are you
also
going to have an impact?
this is also cash is involved. No?
Yeah, cash is involved. 100 rupees, 1200 rupees cash is going out.
Going out, no, then expenses will be counted, then now will be.
Then what about this one? We are reducing the liability also to the same extent, right? 1200 rupees.
Okay. In this
Here we
case,
created liability every month 100 rupees. So that total salary payable got 1200 rupees by the year end. Now we have to cancel. We are canceling the salary payable and we are paying through cash. So cash is also reducing 1200 rupees and as liability is also reducing 1200 rupees.
yes, already the same entry will be there. No, that's the reason this is there is no impact for this entry.
Yeah. So just understand the components of NAV, guys. If you are writing some entry, we need to understand the component. Cash, yes, is a NAV component. Salary payable, this is also liability component. Both are reducing. One is reducing liability, another one is asset is reducing. So no impact, right?
That's correct.
What is the liability side and asset side? But in this case, NAV component is only this one, salary payable. Salary is a P&L component, not a NAV component. Understanding?
Yes, sir.
So only on the accrual part, NAV will impact. Then let's come back to the prepaid. So we are writing this entry, prepaid account debit to cash account credit. Now tell me, are we going to have an impact on NAV?
Yeah, we have paid for expenses for first only. Then we cash balance will be reduced.
Yeah, we are paying as an expense on 31st December. How we are paying? As a prepaid and cash account.
Then that's the reason cash will be cash will be going out. No?
Cash is the asset going out. What is it? Prepaid. Is it asset or liability?
It's asset
Asset. Is it increasing or reducing? 1200 rupees.
increasing.
And cash is also asset. It's reducing, right?
Yes.
So
No
one
impact.
asset is increasing, one asset is decreasing the same
No
amount.
impact. No impact.
Is there an impact on total assets?
No
No,
impact.
sir, no impact.
No impact. Okay, let's come back to the accrual part. I mean amortization. We call it as the amortization part. Accrued means every month we will accrue, then we will settle it. In case of prepaid, first we will pay that amount, then every month we will amortize. Every month when you are charging the profit and loss account, that is called amortization entries. Okay, let's come back to the January 31st. We are accounting expense accountable to prepaid. Now tell me, will it impact our NAV?
Yes, expenses will be reduced 100 rupees.
How it will impact NAV?
We'll show expenses in the profit and loss. No?
Yeah, profit and loss is not a NAV component. We are showing it as an expense. Expense is not a NAV component. Which is a NAV component in this entry?
Prepaid account.
Prepaid account is the asset. So this is the only NAV component.
Yes.
So there is a reducing of prepaid expense, right?
Yes.
So there will be impact in the NAV and amortization entries. Understood, everyone? Everyone understood or not? Hello?
Yes, sir.
So on direct part, directly we are posting the entry. So there will be an impact in the NAV, in the direct expenses. In the accrued expenses, while accruing, there will be impact in the NAV, main door logic. So there will be an impact on the NAV and accrual part. Again, there won't be an impact in the settlement. Let's come back to the prepaid. While creating the prepaid, there won't be any impact on the total NAV. But on a month-end basis, when we are amortizing the expense, again there will be impact in the NAV. Understood, everyone?
Yes, sir.
So this is the impact of NAV calculations, guys, for the expenses. Is everyone clear with this?
Yes, sir.
See, as an expense, we have all these categories: direct, accrued, prepaid, right? So we understood the entries and also we understood the impact of NAV. Now your part is, you need to create a similar kind of dashboard. You mean similar kind of calculations for the income also. I need entries. Will it impact? Where it will impact? When it will impact? I need all the calculations for the income also. Okay, income. Let's assume any one income. Maybe let's have interest. Interest. So, in case of direct interest accrual and also interest prepaid. Prepaid in the sense, if you are receiving income, that is called advance. Okay, accrual income. Accrual income. Advance received. Advance received. Okay, I need general entries for all this. Can you guys come up with these answers for tomorrow?
Yeah, Mahesh.
Yes, sir.
Okay,
Sir.
just try to revert these expenses clauses and everything. Okay, if you want, I'll share this as well with you. Maybe let me share it with you. I'll take a screenshot. Share it with you once again. So everyone should prepare the entries and you have to come up. Just for your reference, I have given. Similarly, you have to prepare it for the income also. Okay. Okay, I'll stop the recording.